Welcome to today's market report.
European stocks rose for a third session on Thursday after the European Central Bank pledged to keep interest rates at record lows for even longer, while strong corporate earnings underpinned optimism about an economic recovery. Eurozone shares rose as much as 1.3% in afternoon trading after the central bank said it would not hike rates until it sees inflation reach its 2% target, well ahead of the end of its projection horizon, and durably. The index was last trading up 0.9%. The rate-sensitive Eurozone banking index inched up 0.2%, although it was trading at levels prior to the policy decision, with government bond yields on the decline. The region-wide Stoxx 600 rose 0.6%, recovering fully from its worst sell-off in 2021 earlier this week. This news should be a short-term positive for European stocks and the overall recovery trade, providing additional support, especially amidst rising nerves over the Delta variant, according to HSBC. ECB President Christine Lagarde warned that a fresh wave of the pandemic could pose a risk to the Eurozone's economic recovery. Travel and leisure stocks topped sectoral gains again, rising 2.7%. The index had hit a 5-month low on Monday on fears over the growing spread of Delta variant. The earnings-driven move, Sweden-based private equity firm EQT jumped 13.2% to the top of Stoxx 600 after reporting upbeat first-half earnings, while Swiss engineering company ABB hit its highest since November 2007 after it doubled its full-year sales outlook. Of the quarter of the Stoxx 600 companies that have reported so far, 61% have topped analysts' profit expectations, according to Refinitiv. Typically, 51% exceed earnings forecasts. The benchmark Stoxx 600 hit all-time highs last week on optimism about a strong recovery in economic growth and earnings. However, markets have returned volatile recently on concerns about higher inflation and a resurgence in virus cases. Weighing on UK's blue-chip FTSE 100, consumer goods giant Unilever plc slid 5.9% after it cut its full-year operating margin forecast due to surging commodity costs. France's Publicis climbed 1.2% after forecasting that its financials would make a full return to pre-pandemic levels this year. Crude oil prices pushed higher on Thursday, trading back above $70 a barrel and helped by a broader market rally, which has recently outweighed concerns about the impact on energy demand from the rise in global COVID cases. Crude oil settled up 2.3% at $71.91 per barrel. Brent was up 2.2% at $73.79 per barrel. Gold futures was up 0.2% at $1,807 per ounce. On the FX front, the GBP/USD pulled back almost 50 pips from the daily highs as the US dollar recovered ground across the board. Cable dropped back under 137.50 earlier on Thursday. It peaked at 137.87, the highest since Monday. The dollar index turned positive during the last hour, approaching 93 level even as US yields slid sharply. The US 10-year yield failed from above 1.30% to 1.24%. The Dow Jones failed to hold into positive territory and is down by 0.2%. The pound remains among the top performers on Thursday as it continues to correct higher, trimming recent losses. Economic data from the US came in mixed, initial jobless claims unexpectedly rising to 419k, the highest level in 8 weeks. Another report showed existing home sales rebounded 1.4% in June, posting the first gain in 5 months. Regarding COVID-19, the 7-day moving average of new cases rose 53%. The key event on Thursday was the European Central Bank's meeting. The central bank kept monetary policy unchanged as expected and signalled it would remain accommodative for a long time. On Friday, economic data to release including June retail sales in the UK and global PMIs. After spending the first half of the day moving sideways in a tight range around 118, the euro-dollar pair gained traction and climbed to a daily high of 118.31 before reversing its direction. The pair was losing 0.25% on a daily basis at 117.63. The dollar index traded flat at 92.767 after pulling back from a 3.5-month high of 93.194 touched on Wednesday.
This is today's market news. Thanks for listening. We'll see you next time.